got to talk Chipotle. Simply, why can't Chipotle stock get some distance from the new low list, given how good it is? For the better part of 2 decades, this is one of the greatest growth stories out there. Tremendous stock, too. But for over a year now, the stock struggled. And that includes last month when the Mexican chain reported a disappointing quarter. Worse, they lowered their full-year same-store sales forecast, which is why the stock plunged 13% in response. Now, at this point, a lot of investors are worried that even though Chipotle sells high-quality food, I had a delicious burrito bought just today, it's just not offering consumers maybe what they want, the kind of bargains maybe that they need. I don't know. Maybe that's one of the reasons why the stock's now down 29% for the year, which we know is not acceptable. So is this a buying opportunity? I know the company's in there buying, or do we need to be worried about it? Let's take a close look with Scott Boatwright. He's the CEO of Chipotle Mexican Grill to find out. Mr. Boatwright, welcome back to Mad Money.
Hi, Jim. Good afternoon, and thanks for having us on today.
Of course. So, Scott, first I want to talk about something that you're doing I think is going to combat a lot of what people may perceive to be an issue, a terrific new whole new way to order for small group, build your own Chipotle, which we came down to a meal basically that costs about $8.50 if you do take advantage of this.
That's right, Jim. It's something we're really excited about. This is something we've had in the hopper now for probably over 12 months, trying to figure out how do we bring it to life in the most meaningful way where we can deliver on the experience. And operationally, we have it in the right spot. And it's really addressing a consumer need around, build your own Chipotle for family meal occasions as well as meal prep. We're really excited about it. It's off to a great start. And you're right. I think it's an extraordinary value. And if you order between now and October 21st with the code TRYBYOC, you can get $10 off your first order.
Well, look, I think that's a terrific bargain. I think up against that, for instance, look, I had a fabulous bowl today. I'm in downtown New York, but all in total, including, yes, the delivery was $28. That's unacceptable. It's kind of like it breaks let's just say it's kind of like there's a social convention of how much you can charge. It kind of exceeded that. Now, we all know food's gotten incredibly expensive. We also know that we love Chipotle. How do we solve this problem of trying to get that price down?
Yeah, Jim, it's a great question. And I'll start with, the average Chipotle burrito across America today in restaurant is still under $10. And I think it's still an extraordinary value. And I think about value, you've heard me talk about this in the past, as benefit over price. And what I want to do is continue to hold price constant and lean into the benefit of the offering. And I know there's more we can do around the occasion and make sure we're delivering or exceeding guest expectations both in restaurant and in digital, to ensure we're delivering on the core equities of the brand, which are centered around high-quality ingredients, crafted with classic culinary techniques, prepared in restaurant in abundance with the value and speed you can't get anywhere else.
Well, okay, so let's talk about the difference between what we just described and what you and I know is just great food like I had for lunch and what the stock's doing. I mean, it is down 17% since you came in versus 19% up for the S&P. The restaurant group itself is up 8%. You're, again, down 17. I don't need to repeat how you are, but I do know maybe either you came in with the stock at a spike, it was at $60, or it's just that, like, right now at this very moment, the market says we want to be in pure value, something that you actually questioned on your conference call when asked by Mr. Tarantino of Baird. Maybe that's kind of the zeitgeist? What do we do here?
Yeah, I think the investment community at large, Jim, is trying to understand, are we a growth company or are we a mature company? I will tell you, I still believe us as the best growth story in the industry, full stop. We're navigating a really challenging consumer environment. The industry has been in negative transactions now for a couple of years. In the last recession, global recession, we were the last to go in and the first to come out, Jim. Right. I think we enjoyed a really strong year last year. And if you look at our 2-year comp numbers, they're still outpacing the industry and the segment of fast casual. So we feel like we're navigating an uncertain environment, and we need to do better to meet the consumer where they are. Yeah, yep. And so I talk about this consumer flywheel, the three-legged stool around operations, digital, and marketing. And there are things that we are doing in our strategic plan to address the concerns that I still have in those 3 areas to ensure we're exceeding the consumer's expectations in this crazy environment.
So once again, I do want to be sure you think that it's possibility you can return to some higher same-store sales numbers, and it's not that we are right now in a situation where, let's say, Chipotle's great growth period is behind it.
No, Jim, not even close. I have a lot of confidence in our strategic plan. I have a lot of confidence in our leadership team. we'll get back on our front foot here. We've got a few levers we're going to pull. I can get to some of the things that we have in the innovation hopper here in a moment. But I have confidence we can get back to mid-single digit growth. We're going to continue to grow restaurants at 8 to 10% annually. We will build another 315 to 345 new Chipotle restaurants this year. So we're excited about the growth ahead. We know we're navigating a cyclical environment that will change and turn as I think things become more steady in the macro and in relationship to whether what's happening with immigration, tariffs, and or taxes. I think once the consumer has more confidence to come back into the marketplace, spending will resume. And I think you know that the consumer today is still in a really good place. If you think about wages are still outpacing CPI, job markets are seemingly holding seemingly well. And so where consumers are cutting back based on the information we have is on restaurants specifically, and then leisure and hospitality. So we know the consumer is going to come back into the space. We have to ensure that we're delivering on value, as I described it earlier to you, Jim. And I think the brand will be back on its front.
All right, well, we just got to go over because I got to be sure because I like the company very much. I always have been a supporter. Darden during this period since you come in is up 47%. Papa John's up 10. Yum up 8. McDonald's up 18. These are all faced with the same situation that you are. Texas Roadhouse is up. Cheesecake is up 70. They're all faced with the same environment you are. So what we have to figure out is, are you doing something that must be changed? Because these other guys are doing, their stock is doing better than Chipotle. Doesn't mean that they're better than Chipotle, but their stock is doing better than Chipotle.
I understand, Jim, and I understand your exact point. I think what we have to do is continue to lean into the consumer experience, Jim, in a more meaningful way, and then really talk about our value proposition through our media channels in a more robust way. So I think our media program or our media strategy has to evolve a bit to ensure that the consumer understands the value proposition at Chipotle more fully. I think we need to do better in restaurant to deliver on that value proposition, both in restaurant and in digital, to ensure that the customer feels the value or sees the value when they get their order at home or in restaurant. So I know there's more that we can do today, Jim, but I'm confident we're navigating just a challenging environment. And then we'll come back out of this on our front foot in no time.
Is that why the company bought back $430 million worth of stock, although admittedly at a $50 basis? You're in there buying.
We are. We're buying more aggressively this year than we have in past years, Jim, because we have confidence again in the strategy. We have confidence in the plan. We know we have an extraordinary product that has high demand for the product. We just have to deliver on the experience.
Well, look, I've got to tell you, I'm glad that you came forward. I'm very excited about this, the whole new way to order for small group. And look, what can I tell you? We love the food as much as ever. So the stock is what I'm going to call a quandary. And I think that you are addressing the quandary, and that is what the shareholders want. Scott Boatwright is the CEO of Chipotle Mexican Grill. Scott, it's so great that you came on.
Jim, I thank you very much for the opportunity to share our story. Look forward to seeing you in future earnings calls where we talk about better results for our organization. And the
All right,
industry.
sounds good to me. Thank you so much, and Mad Money's back after the break.
Coming up, Cramer's hitting the rails and catching up with the CEO of CSX, seeing if it's full steam ahead for this rail transportation company. Next.